at Chola Securities joining us this morning. Dharmesh, very good morning. Talk to us about how you're viewing the market at this point, and what exactly would you advise an investor to do? Should you buy in given all of the uncertainty that's playing out, or should you stay away at this point, wait for things to settle down?
Yeah, good morning, Harsh. I mean, very difficult to take a call as to the longevity of this uncertainty. And knowing Mr. Trump, he always has a, uncanny, ability to come out with something which puts uncertainty back into place. So, I mean, Iran thing may be settled in, say, 15 days to 20 days time frame going forward. But that means 1/4 of, impact will already be there in the earnings and everything. So we were earlier penciling in around 12 to 13% kind of earnings growth for FY27. I think 200 basis point it is almost there for to be taken. So it will be back to 10% or 9% kind of earnings growth. To that extent, the price damage has already happened into the market. So Nifty currently is, penciling in around 19 times FY27 PER multiple. So that I think is a comfortable zone to start investing. And having said that, there are multiple triggers apart from Iran war. The other thing will be the state elections. 4-5 states are going to election this month. And then there are worries about monsoons thing. So heat wave is already there. And monsoons uncertainty, maybe El Nino or something like that may happen. That's the initial report which is suggesting. So we are very cautious on the market. We are suggesting a selective staggered kind of a buying approach. Anyways, you have to buy this even if it's a 3 to 6 months kind of a phenomena. And right now we are not suggesting more than 20-25% ideal cash allocation into the market. That too into very select sectors. And after the one more month, we'll see where to do the bottoms up market. So one thing is very clear to me, Harsh, this entire year will be a stock pickers market. It will be a bottoms up market rather than, the sectoral theme playing out.
Right. Interesting. Dharmesh, but one's got to research and keep the shopping list ready. What's looking like it's come to now attractive valuations?
Yeah, good morning, Asha. Definitely, yes. I mean, there are many domestic facing companies which have been doing really well. And I think broadly defense is one sector which tends to benefit because of this market, meltdown. Even many stocks have corrected out there. So their HAL and BL continues to be the topic out there. And there are a few companies in the mid-cap space going to be a mid-cap kind of a basket like Power Mac Projects Limited. We have initiating coverage on that, and the stock has corrected significantly. So now it's available at around 12 times 1 year forward earnings multiple with a strong order book around 39,000 odd crores from the MDO division, which will play out from FY28. And the balance of 15,000 crores is from O&M. Yesterday, also, they won 700 crores of order from Adani for the thermal power maintenance. So that's one company which we are looking very closely. Then you have Welspun Corporation, which is the pipes division. So again, both India, DI and LI pipes, they do in India and US, and they have a company in US as well. So a good company, a good stock price correction has happened. Valuation multiple 11-12 times 1 year forward, it's available. And with Jal Jeevan Mission getting, underway again, back into action, things are likely to improve out there. So, I mean, these are the sectors and baskets which we are looking for. But broadly, defense, metals, automobiles is what we are looking into to keep the shopping list there. For example, Mahindra & Mahindra has corrected, significantly from the highs, and it's now available at around less than 20 times 1 year forward P multiple, where the growth itself is more than 20 times, and all the vehicles division is doing well. So again, stock to be looked into from a bargain buying from at least a year's perspective. So I have been it's a scattered kind of approach from the larger, market, but sectorally, the two sectors, defense and metals, automobiles we are looking forward to. What we are skeptical about as of now is the banking and NBFC space. Because I think the circular impact of this entire Iran war crisis will play out. There would be some stress into the asset quality going forward, particularly from the MSME and small cap space. And the cost of funds will be getting tighter from here on. It won't be easy there would be 20 to 25 basis point kind of hit on the NIMs in Q1 of 27. So there one has to be cautious. So we are not recommending as of now for an investment play to have a new bets. However, if you're holding, continue to hold the same.
Right, interesting. Well, bunch of interesting stock